I bid you all good morning, good evening, and good night wherever you may be watching this transmission. This is it. This looks like it's it, guys. It looks like it's the end of the housing market as we know it in Australia. I said, and I've been saying this for the longest time, Australia is going to be the first cookie or the first domino to fall. Then right after, it's going to be New Zealand, then the United Kingdom, then Canada, and then Western United States of America. It's kind of weird how America's broken down, but the west of America and the northeast part will fall. Okay, guys, here it is, guys. Here's the story I wanted to actually, this is the main story that drove me to read this, read what's going on right now, is this one. COVID could hit housing as hard as Australia teeters at the end of a recession. So housing is beyond what people could afford in Australia. If you have a low six-figure income, you still can't afford to live. It's just, you can't afford to live. The average house is just over $1 million, and it's not easy with the amount of taxes you pay and the cost of toilet paper. It's just beyond what people could afford. So let's tackle this real quick. Let's go over this real quick. All ords down 114 points, down 1.90% right now. Market's going to close in 2 hours, sitting at 5,881. The ASX 200 down 121 points, sitting at 5,818. The Australian dollar is going strong against the American, keeping it around 65 cents. The reason why is because Australia got their first injection of stimulus today. Oil is up $1.31. Up 3.81% at $35.67 a barrel. Gold is down $1.50, sitting at $1,658. And then Bitcoin to Australian dollars about 9,000 US. Australian and euro, no one cares. Australian New Zealand dollars almost at par. And the NZX 50 is up 35 points, 35.62 points, sitting at 10,933. FTSE is up, and the Nikkei is down 279. Down 1.41%, sitting at 19,587. The Hang Seng, again, really rough start for this trading day, sitting at 25,384. That's in Hong Kong, down 7.75%. And the DAX is down 149 points. So, guys, things aren't looking good. The Dow Jones, oh my God, this 700-point recovery, sitting at 25,000 points. Well, let's go. The growing probability of Australia's first recession for nearly 3 decades. I'm going to beg to differ. I think the last time Australia was in a recession, I think it was in 1975, 1976. 3 decades could stop the property market in its tracks. According to the industry experts, as the COVID outbreak threatens to wreak havoc on one of the economy's key sectors. Remember, Australia, Canada, UK, New Zealand, their economies are based off of wealthy investors to come in and buy your properties. That's what these economies are built off. They sold all the big industries to China, and they have nothing. You know what I'm saying? Scotty Morrison predicted on Tuesday that the COVID outbreak could have a greater impact on Australia's fortunes than the global financial crisis. But while the massive cut in interest rates, government stimulus, and ramping up of Chinese demand saved Australia and the housing market from the worst banking crisis of 2008-2009. So basically, they sold their country out after 2008-2009 instead of resetting the button and letting people start over and starting from ground up and building a good, strong economy, producing, exporting, and actually doing what countries used to do 30 years ago. Things might not work as well this time around. Outwardly, there doesn't appear to be a problem for property. The latest monthly figure for house prices showed a rise in 1.1% across Australia, and auction clearance rates were above 80% in Sydney and Melbourne last weekend. Instead, Australia faces a cocktail of economic headwinds from the possibility, I call it a perfect storm, for the possible virus-driven lockdown of large parts of the population to rising unemployment, and from a struggling stock market to possibly even a credit crunch as banks across the world rein in riskier lending. Again, remember, all these banks were caught in Australia in this huge whirlwind of cluster mess that they got themselves in was absolutely phenomenal. But a greater risk is that the outbreak will trigger job cut and recession, where there are fewer buyers and owners are suddenly forced to sell if they can't make ends meet. Well, it's like the stock market the other day. I'm trying to sell some stocks I had, and they wouldn't let me sell them because there's no one there to buy them. And then not only that, I was sitting on, what was I sitting on? I had to sit for 20 minutes on the sideline until they reopened the markets. But a greater risk is the outbreak will trigger job-cutting recession where there are fewer buyers and owners are suddenly forced to sell if they can't make ends meet. And it says right here, another threat to the property, or more specifically, mortgage availability, comes in the shape of possible credit crunch. The spread or difference between what U.S. companies pay to borrow money and the headline bank rate is widening, and it could start to choke off supply of capital to Australia's banks. That's a huge issue right there. This week's panic in the markets has caused it widen more, signaling an increasing concern in the money markets that companies could default on loans which have ballooned to record levels over the past 10 years. That's a big deal, guys. So here's the deal, guys. Let's go over here. Housing market is over for Australia. Goodbye. That's what I have to say, guys. Aust stock dive again. Stimulus delay. Austerity stock dive. Sorry, Australian stock. I thought it was austerity. Australian stock dive again on stimulus delay. Disappointed by lack of promised detail on major U.S. stimulus plan, investors have sent Australia's volatile share market into another deep dive. So here it is. And Reserve Bank Deputy Governor told business leaders on Wednesday that the RBA was reluctant to speculate how deeply the COVID will hurt Australian growth beyond the March quarter. Guys, remember, Australia is going to go into flu season in about 6 weeks. And it's going to be it's going to be fall there next week. It's going to be, next week is going to be like first week of fall, a week and a half. And then it's going to go into, they're going to go into flu season. And what's going to happen with COVID? That's the question. COVID is the question. So anyways, guys, I want to know what you guys think in the comments below. I really would like to know what is on your minds with this, because right now, it ain't looking good. It ain't looking good right now, especially with where the markets are sitting at right now. Markets are due to close in another 2 hours, and they just keep going down. And they've gone down even more. Went down 2%. All odds, ASX went down it went down another 0.25% to 2% total down. And yeah, it just keeps going down. The Australian dollar is strong against the American right now, but the oil right now is not booming, but it's above $35 a barrel. Gold is just kind of just in limbo right now, just with all the amount of shorts that's on gold. Lots of shorts on golds, lots of puts on gold right now. So we'll see what happens, guys, where things are going to head. Let me know what you guys think in the comments. Is this the end of the Australian housing madness that they've had pretty much for the last 30 plus? I think it's from 1975. This bull market started. Now we're looking at a bear market. So let me know, comment below. Thanks for watching.